You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 30th day of April, 2018. So glad you could join us on this fine Monday. Whoever you are, wherever you are, thanks for joining. If you're returning, welcome back. If you're here for the first time, a special welcome to you. I hope you had a great weekend, right? Quality time with the family. Saw you in church. Tip my hat. Always good. If you can't see the chart I have up of the declining S&P 500 Emini Futures, go to our homepage, cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered all the way through midnight. Then you'll have to do it again tomorrow. I know. Good news is, if you do it tomorrow also, then you'll be covered for the whole month. 30 seconds for 30 days. You'll have access to the discussion, to the charts, to the chat box. You get it all. 30 seconds for 30 days. As a backup, always keep bookmarked youtube.com/CFRN/live. We do a dual broadcast each day. As we're streaming to you, we're streaming live to YouTube as well. So, We'll talk about the chart in a second. Let's go look at the numbers around the world. We'll start with the cash markets, and we'll start here in the U.S. The Dow is currently up 53 points. The NASDAQ is down 39. S&P down 6.5. The Dow is positive by 50 points. The S&P is negative by 7. By the end of the day, they'll both be on the same side of the street. Russell 2000 down 3.5. That's it for the U.S. markets. The only green so far is the Dow, or at this point. In the commodity basket, crude oil is up 18 cents, trading 68.28 last. And gold down $7.20, trading 13.1620 last. The only mover or shaker in the U.S. markets would be the NASDAQ, which is down 37 points. That's a little over 0.5%. In the Asian markets, the Nikkei closed positive, 148 points. It's a little over 0.5%. The Shanghai closed up 7, and the Hang Seng closed up 527. That's 1.75%. Big day in Asia, big green day. Europe, green as well, with the FTSE closing up 7 points. The DAX up 31. The CAC up 37, a little over 0.5%. And the other mover and shaker in the Asian markets, the Nikkei, as I said, added 148 points at the close. That puts it up over 0.5%. Well. Let's see what our friend BTC is up to today. Real quick. Just kind of rolling sideways there. The longer we roll, the longer we build a base, and we can climb that next rung on the ladder and build a base. And up we go. Big news in the crypto world, as if that's a daily occurrence. Diginex Limited, a multinational crypto asset investment company headquartered in Hong Kong, has announced it sold a 51% stake of its cryptocurrency mining and high-performance computing operation to Madison Group Holdings, trades on the Hong Kong exchange, I believe, for $60 million US. Madison Group is a distributor of alcoholic beverages. Now you might ask, what do alcoholic beverages and digital currency have in common? Well, apparently, Madison Group Holdings. Now, between these two companies, a number of synergies, including the leveraging of Diginex proprietary platform, DigiAssets, can be used by holders of cryptocurrencies to purchase high-value wines and other assets. Madison Holdings Group, formerly Madison Wine, is an investment holding company mainly focused on the retail and wholesale alcoholic beverage business. The company offers a wide spectrum of fine wines, wine-related products, and other spirits such as premium and rare whiskeys, cognacs, and Chinese. Boy, I've been to Hong Kong. I can't do it. Baijiu. Very good. Now, Madison is listed on the Hong Kong Stock Exchange since 2015. Diginex, on the other hand, a privately owned company, has offices in Hong Kong, Switzerland, Germany, and Japan. It has mining operations in Asia, Switzerland, and Sweden. How did it all happen so fast? The $60 million investment by Madison is said to allow Diginex to fast-track the expansion of their GPU mining operations in Western Europe in partnership with hardware suppliers, power and security providers in order to build a secure and efficient GPU-based cryptocurrency mining data center. Miles Pelham, the CEO of Diginex, stated, "This cash injection allows us to expedite our steps towards becoming the global provider of distributed ledger technologies. We will continue to build out our mining operations in Sweden and Switzerland, but also focus on helping corporates and governments across the world implement transformative distributed ledger transaction applications. See, these guys aren't digging for gold. They're selling picks and shovels and Levi blue jeans. On the other side of the world, in Silicon Valley, on the morning of January 31st, 2017, a 37-year-old man arrived at Facebook's headquarters in Menlo Park. And without an appointment, he said, "I want to see Mark Zuckerberg." The man, not a Facebook employee, refused requests to leave the tech company's campus, prompting Facebook employees to call 911. 8 police officers arrived, but the man remained steadfast, ignoring their orders as he insisted he meet the Facebook CEO and even tried to seize a police officer's equipment, according to police records. Now, I don't know. It doesn't go into any detail. It just says he tried to seize a police officer's equipment. All right. He was later found to have active warrants for his arrest. On March 25th of 2017, a man turned up at the Facebook campus main entrance saying he had been scammed after being told he had won the Facebook lottery. He left only after staff members called 911 and 2 police officers arrived. Then on August 18th, an unidentified assailant sprayed mace in a Facebook security officer's face and then fled in a vehicle before Menlo Park police officers could apprehend them. These incidents, which have not been previously reported, are in logs of 911 calls made from Facebook's Menlo Park campus between January 10th of 2017 and March 28th of 2018. So just a little over a year. They provide a snapshot of the security issues that one of the world's most valuable and recognizable corporations faces daily at its headquarters. Now, during this 14-month period, guess how many 911 calls were made from the Facebook campus? 1 a day? Oh, come on. That's a little much, don't you think? How about 239? Wow. Roughly 1 every 2 days, ranging from workplace incidents to encounters with potentially dangerous people drawn to the Facebook offices. The logs highlight the challenges tech companies face as they try to balance Silicon Valley's tradition of open, university-like campuses and casual working culture with the security demands that come with offering services used by hundreds of millions, even billions of people. Concerns have been especially acute since a woman opened fire at YouTube's California campus earlier this month, wounding 3 staffers before turning the gun on herself. Some say that the shooting should cause, I'm sure it has caused, tech companies to rethink their approach to security. Well, as we can see up on the chart, S&P 500 Emini Futures, we are about to hit last week's weekly trading zone at 2656/57. John had suggested last week that I change the color of the lines when they're last week's zones. And I'm thinking what color might be appropriate. Perhaps yellow? I'm not sure how well yellow would show up. But during the show today, we'll pick a color. We'll try that. We'll try it for a week to see if it works out. If it,
could just change the style. So
yeah,
it's not dotted. Make it a solid line.
That's a good idea as well. We could certainly do that. Last night on the S&P, we said to consider selling 2669 if the opportunity presented itself, and it did. And no poking fun at the tweets that didn't go so well, because that's the truth about trading. Sometimes they do. We've had extremely, I would say, good fortune of late. And, you know, sometimes the market just, well, stagnation, I think, was the greatest offender. So from 26.69, I guess, would be complete without the S. There you go. From 69 down to 59, well, that's 10 points. And then toss on another 2. We'll call it 10 plus for now. Absolutely fantastic way to start out the week. When I come back, I will give everyone an opportunity to take a screenshot of last night's trade alerts. Or, as Michael is getting ready to pop in, you might grab it now if you want. And Michael, if you're ready, we are ready as well.
Okay. Okay. I am ready.
Oh, hey. Oh, you already took it. Okay.
Yeah, I did. What?
Oh, I was just gonna. No. If you got a. Wow, is that a spare tab? Do you only have 1, 2, 3, 4? You only have 5 tabs open?
I actually have.
Are you feeling okay?
91 over here being wrangled.
Oh, wrangled.
It only allows me to put 6 up at a time before it starts wrangling them.
Ah, so that's what wrangle means.
Yeah. Before it starts shoving them in that folder over there, and then it's FIFO. So you know the stuff that I had that was really old, it just pushes that off the bottom of the list. If you look at this, all this stuff from 2 weeks ago, 2 weeks ago, 1 week ago. Now all this is going to get pushed off. But you know, I could just delete all these. But it does it all for me. See, those are all the different apps that we've looked at over the last 2 weeks.
Well, if you do have I can show it when I take the screens back. I put up a couple of videos. They're at emini.cfrn.net.
Okay.
And those are the newest video discusses how to use Fort Delta. As you suggested last week, we could use such a video. And so
I got to watch it again today, because last night I was really tired, and I think it looked complicated to me last night. But I'll look at it again today.
And I republished some of the others, and I think a couple of new ones. So at emini.cfrn.net, it kind of walks you through everything from creating your very first My Ether wallet all the way to buying CTG on Fort Delta and keeping things safe on a Nano S. And always remember, at cryptodailyinfo.com, at the top of the home page, you can click on Ledger, and it will take you to a page filled with videos that deal specifically, professionally shot videos, that deal specifically with setting up your Nano S cryptocurrency hard wallet. And with that, I'll bid you folks adieu. Step back.
Okay.
It's all yours, and I'll be here when you're done.
Excellent. All right. Well, we had a good day this morning, everyone. The last day of the month and the first day of the week was a very good day. We were up at 405 at one point, but then we stopped out on one crude trade at the end there. Got us back down to 325. But anyway, let's get started. Good afternoon, everyone. Today is Monday, the 30th day of April, 2018. Okay, first we'll start out here. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page here at cfrn.net. Right up here at the top, it says sign up for the CFRN Live Training Room. 100% free trials. User indicators, learn our strategy. Click here. when you click there, you will be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit that submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click that confirmation link, you do not get a free trial, because we don't know you took a free trial until you do that. Now, tomorrow is going to be the first day of May. Can you believe we're in the 5th month of 2018 already? Tomorrow, you're all going to have to do this. You're going to have to go to cfrn.net, the home page, click on this big microphone, then scroll down to where it says Watch Live Now, and click on that. Now, after today is done, we are going to have to set up a new link for tomorrow. So it won't be this link. Okay, it'll be register.gotowebinar.com/register and some other number tomorrow. Okay, we'll have to set that up. I'll set it up after I'll set it up later on tonight, probably. And we'll be all set with that. But remember, tomorrow you are all going to have to do that if you want to get into this session. Okay? Okay. The spreadsheet. I was just prepping the spreadsheet for a new month. And I will get all that done also a little later. But today, as I said, is the 30th day of April, 2018. And let's see. We made 12 ticks on the euro, 18 ticks on crude, and 7 ticks in gold today. That got us up to 325. 325. Today it took 7 minutes and 2 trades to get to my goal for the day. And I just wanted to see, Gary, are you in here? EFG. Yeah, you are. Gary B. You are in here. Okay. David, are you in here? No. Okay. Gary, you were talking about the first 30 minutes, and you can see that day, that day, that day, that day, that day, that day, and that day. I got the goal for the day in the first 30 minutes. I know you were just talking about the ES, though. Okay. And it may have actually been on those days. You know, it may have been the ES that got me the goal. I don't know. On what market, Gary? Other Gary. Gary H. Okay, I'm going to finish doing this anyway. 4:30, 2018. We made 12 ticks on the euro. We made 18 ticks on crude and 7 ticks on gold. All right, that got us up to 325 on the day. It took 7 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract. We took a total of 11 trades. On the month now, we had $4,297. That's over 21 days, averaging $204 per day. That is one contract, 2 hours per day. Okay. And on the year now, we're at 13,651. That's over 79 days, averaging 172 per day. Again, that's one contract, 9:30 to 11:30 Eastern. Okay. Now, let's get into what we did or didn't do. In the gold, we started out right here. We had 10 ticks in this, but I for some reason I couldn't drop my stop, and when I was trailing it, and it came back, and I ended up just getting 5 out of this right here. Okay, we got 2 more over here on the close down below the trend line, and that was pretty much it for the morning session. Now during the break, there was a long trade right here to capture that leg up, and there would be another one going on right now. The other one would have been from right here. It would have been a close above this trend line right here. Okay, so from right in there. Actually, you know what? It wouldn't have been from right there. You had to break dynamic resistance first. So it would have been a close above that trend line right there. And over here, we have broken dynamic resistance. That's what these dots are down here. But let's see, would it actually have even been a trade? It might have been a momentum long trade right here. Okay, just a little momentum long trade, went a couple of ticks into profit. Your stop would have gone to break even, you would have had to get out. Oh, okay. Concierge trade. Okay. On the euro, let's see. On the euro, we started out with a couple of break-even trades right there and right there. And then we picked up 12 ticks on this bounce off the BBC right here. Now the rules, step 1 is the MA1, which is this red and blue line, crosses below the BBC. BBC is the green line. That's step 1. Step 2, price pulls at least 1 tick away from the BBC. That means you have a bar that is closed that is at least 1 tick away from the BBC. Step 3, it comes back up and touches the BBC. Step 4, you look down here in the slingshot, make sure the cycle is red and below the green line. Your entry point is going to be the next down close after price touches the BBC. It can be the same bar, it doesn't have to be the same bar. It can even be on the other side of the BBC. It's going to be your next down close. Okay? So we picked up 12 ticks there, and then I missed this one right in here. That gave some sort of profit. And then during the break, we would have had to have broken this dynamic resistance before we could take a trade. So that would have been up here. Okay. And then another one right back here. Okay. And that was the euro today. Now crude oil, I missed the very first trade opportunity on crude, and I'm sorry I did, because it was right here, and that would have easily given me the goal for the day in the very first trade. I did pick up the second one, and again, I didn't move my stop fast enough, up to 10 ticks. So I did move it up to +8, and I got +8 on that. And then I took +2 right here. Okay, now crude kept going up. During the day, it had broken dynamic resistance here. Broken dynamic resistance means you have a close above red dots like this that is pulled away from the red dots. Hey, get back under there. That is pulled away from the red dots. Okay. Let's see, what kind of trend lines would I have drawn? It would have been a momentum long trade from right here. Then I would have said the cycle's going down too steep there. And then it changed directions. And so on this one, we picked up another 10 ticks to put us at +20. Then we had a break even there. Then we picked up 6 ticks there to put us at +26. We missed a momentum long there. We missed a regular long there, trend line long. And we stopped out right here. Now this stopped us out pretty much to the tick and then went down and did what it should do. But that put us back to +18. We missed this one right at the end of the morning session. And it looks like it changed directions here at the end of the morning session. Broke dynamic resistance. So you could have taken a long there, there, and there if you wanted to. Then it changed directions, but it was not giving you anything. It did put in a new high on the day right here, though. We ended with +18 on the crude today. Okay. And the ES, let's see. Yeah, okay. On the ES, we had just one break-even trade right here. There was another trade that we did here at the end of the morning session, but I did it after I was all done filling out the spreadsheet, so I'm not counting it. Okay, but we did go short there. And it seems like there was a lot of movement here during the break. Good Lord, look at all that movement during the break. It ended up here, and that was an hour ago. An hour ago. It dropped all the way down to 26.57 from 26.74. That's significant movement there. Let's see, were there any opportunities? None within there. There was the one right here that I pointed out already. Another one there, another one there. There was nothing in here. There was a short right there. And now it's turned around and it's going right up into the weekly trading zone. So there's not really anything we can do with it. Okay. Now eventually that's going to draw a rectangle for me. There it is. I'll put one here too. Okay. And that's it for the morning. If you can read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. As I said, we made, and today's the 30th day of April, we made 12 ticks in the euro, 18 ticks in crude, 7 ticks in gold. That's $325 per contract. Today it took 7 minutes and 2 trades to get to the goal for the day. At that point, we were up $100. And it took a total of 11 opportunities this morning. So, on the month, $4,297.50. That's over 21 days, averaging $204 per day. On the year, 13,651. That's over 79 days, averaging $172 per day. Okay, $172 per day. All right. Now, if you have not taken a free trial and you want to, go to the home page here at CFRN.net, and up here at the very top, where it says sign up for the CFRN Live Trading Room, 100% free trials, user indicators, learn our strategy, click here. When you click there, you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit that submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, click on the confirmation link, and we know you took the free trial. All right, so we'll send you all the information you need to get into our live training room. Remember, tomorrow, everybody who is in here is going to have to go here to the big microphone and click on that. And scroll down to where it says Watch Live Now and click on that. And fill out this little form for the month of May. Okay, for the month of May. Going to have to do that. All right? All right. Okay. That's it, guys. With that, I can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Okay, Dwayne, if you are there. If you are there.
Yeah, I'm here.
Excellent. Okay, your mic is on.
And recap of the recap.
Today, it took 7 minutes and 2 trades to get to the goal for the day. And we were at $100 per contract at that point.
That's outstanding.
Thank you. Thank you.
It's also the truth about trading.
It is. Some days it's difficult. Some days it's not.
Mm-hmm. Any unanswered questions in the chat box?
No.
Okay.
Gary, Dwayne is probably going to go over the alerts. See, he says he took the Concierge long on the ES last night and took a full stop. Don't know how I could have avoided it. This was meant for Dwayne. He got his goal in the room this morning when he was.
Yeah, we'll pull it up absolutely and have a look see, and we'll discuss that in detail. I'm just getting okay. You'll have my full attention momentarily. Just trying to take a look at something here.
Okay.
Sending some instructions and we're not followed. Don't you hate that?
Yeah, I hate that.
Give me one more minute.
Okay. You take a moment.
I want to show you guys something, but I don't know. Maybe I will. Maybe I won't. Yeah, I guess.
Okay.
Still putting some spit and polish on the whole thing. But you know how sometimes people will Google like Christians and cryptocurrency together, right? You know.
Okay.
Some people, right?
Mm-hmm.
Well, they might get led to ChristianCryptocurrency.com, the latest addition to the CT Global Media portfolio of fine internet properties.
Fine internet properties.
Yes, indeed. Yep. We got a few bells and whistles that we don't have elsewhere, but we're going to be interchanging our bells and whistles. So you can do, some different stuff here.
Mm-hmm.
And some of this will migrate over to Crypto Daily Info. Now, this, it's actually Christian cryptocurrency news, and the whole point is to discuss the big question: should Christians be involved in cryptocurrency? What are the ramifications? What does the word say? And that type of thing. So as you can see here, you'll be getting Christian news as well as cryptocurrency news, and it is updated on a regular basis. And that logo, that's a working logo. We've not completed it. Well, actually, we did complete it, but I wasn't exactly 100% excited with the results, and so I'm going to go back to the drawing board, as they say. I think I got the image here. Where is that? Where is that? It's not a bad image, but it's not high resolution, and I understand that resolution has to do with dots per inch. And so when you're printing something, you can print something with a high resolution or low resolution. The difficulty is in creating a high resolution image. Now, I know there's probably somebody in this audience, who on a regular basis works with things such as high resolution images, and I'm sure that during the show you'll type into the chat box the best program to use to create said high resolution images, so that this won't appear fuzzy when I blow it up. Christian Crypto News. There you go. Okie doke. So what else, Michael? Anything we want to cover, talk about? Because I don't know if you're dropping out or if you're hanging out or how you're rolling today.
I'm going to hang out a little while.
All
but,
right.
Yeah.
Okay.
No.
Okay, I'm looking
John.
at Gary.
John said okay, but he's not out there yet.
Okay. All right. Well, he'll be here in just a minute. Okay, Gary. So you're talking about the long side on the Concierge Trade Alert. So let's have a look. See here. Consider buying 2681. 2681. Okay. Now 2681. We're going to need to go way back over here. Okay, at first blush, Gary, I don't believe there is anything you could have done about that, because at 2681, okay, now this is midnight last night, and this is the market open. Hey, did the market open 30 minutes late last night?
I think it did, yeah. 5:30.
Was there a
Central.
reason? Was there a reason for that?
I don't know.
I'm sure there was a reason, but nobody bothered to tell us. Because that kind of threw me for a loop right there. So right here, guys, let me put the yellow arrow like I do, which symbolizes the Globex Open. Okay, right there. All right, so the Concierge Trade Alert said to consider being long 2681 if you get the opportunity. It popped up all the way to 82 and a quarter. Now, if you're going to be long 81, your stop is going to be 76. That's 5 points, $50 a point, $250 per contract. And what happened is the market just ran out of steam. And that will happen. That is the truth about trading. Just as what happened in the live training room today. You know, there are trades that everything is as it should be, and you get into the trade and the market has other ideas, and that's why we're so adamant about hard stops and so adamant about not slipping your stop and always using the stop. And mental stops won't help you. This will happen. This, just as we came down through 69 and we're positive 10 points, this was a 5-point stop out. Now, because this is discretionary trading, I talked about this a little bit last week. This does not apply to our rules-based trading that we teach each morning in the live training room. Let me grab, let's see which one of these I can do without. I think this one.
John is in, by the way.
Oh, is he? Okay, great. Let me show these guys this real quick, so you'll know what I'm talking about, and hopefully that will get your question answered, and then we'll open up John's mic. Let's see, ES. Yes. Now I just did a fresh reboot. There should be no hesitation here. All right, yes. And then we're going to drop down to, oh, we'll go 5 minutes. All right. Now, oh, we got to go back. So that's the opening salvo last night. It is, okay. Now we're looking for 2681. That didn't quite do it. It's going to be this one over here. Okay, there we go. Okay, so I'm going to just drop a horizontal line to keep things simple here for a quick moment so I can get to John. 2681. Okay, so there you go. It popped. It popped again. Now your stop, we said, would be back here at 76, which is 5 points below. One of the shows last week, we talked at length about what's called scratching out. Now, Mike Reed has a method whereby if he does not get instant gratification and or the trade moves against him, he does not hang around. He scratches out. He tries to minimize the loss, which is diametrically opposed to Mark Douglas's way of doing it, which says once you assume the risk, that's it. Now in the live training room, we take the Mark Douglas approach. In the discretionary trading, the Concierge Trade Alerts, we tend to lean more towards Mike Reed's method of doing things. Because, okay, once I trigger in, and then it goes back below, I'm like, no. And then it pops up again, and this time all it can barely poke its head up, and then it starts to come back, okay? And then when it takes out this low right here, man, I'm not feeling so good. My point is that an option available to you with discretionary trading, not the rules-based trading in the live training room, but with the discretionary trading, is if in fact you see the market moving against you, you have the ability to get out. Now, the caveat here, and I said this last week, however you're going to handle it, if you're going to go the Mark Douglas route or the Mike Reed route, you need to be consistent. In other words, this is my gospel. When presented with this set of circumstances, I am going to consistently do the same thing. So my results, whether they're good or bad, profitable or not profitable, at least they'll be consistent. Now, at this stage right here on the 5-minute chart, a bearish cross, which happened at a price of 26.80, that right there could be your, I'm going to scratch out, and if it comes back to me, fine. If not, well, that's fine too. Red and hooking down, I don't even know what the slingshot might look like in this case, but we can take a quick peek. And then we got to get to John. I don't want to leave him hanging. So as a partner, you have, not only the trade alert itself, but you have access to the indicators. And I used to have access to the slingshot. Did I lose all indicators? Michael, are you still there?
Yeah, I'm here.
If you could go ahead and open up John's mic, because for some reason my indicators went bye-bye. And I just did a reboot. It's always nice when you can blame it on that. Hey, John, welcome to the show.
Hi, how are you?
I'm doing well, and yourself?
Well, did you see the Grand Prix yesterday?
No, I didn't. No. How was it?
It's a pretty incredible race. One of the best ever. Very dramatic. It was about 6 crashes and some unexpected winners. So definitely, if you go on my Twitter, go about 20 tweets back or so, I've got half a dozen tweets there telling the whole story. But it was really a very dramatic race, and had the right outcome, because Lewis Hamilton won, so he's back in the lead for the championship this year. And this is the first race he's won this year, so he's had a bit of a tough time, but came through yesterday due to the bad luck of several other people. So, and the Mexican guy, Sergio Perez, came in third, which is first time he's been on the podium in about a year and a half. So it was a pretty good race all around. It was very exciting because the rate was one of these nail biters right down to the finish. The guy who was leading the race for 49 out of 51 laps hit a piece of metal on the track and had a puncture just two laps from the finish. So
now, what's the length of that race?
The length of it? It's about usually they're about an hour and a half.
Okay. And the track,
they're about a mile and between 2 and 3 miles per circuit, and there's usually about 50 laps. So it's a pretty long race. It's a lot of ground. I mean, to give you an idea, one crash happened at 230 miles an hour, but it wasn't a fatal. There were no injuries or anything. But anyway, there's another crash going on today that we've been talking about for a while. It hasn't. It's in its early stages, but when the market starts going down on very good news, and it doesn't, the news in the last week doesn't get any better. That's a very bad sign. And we were very suspicious of this rally last night, and it actually started selling off before the open, and we shorted it right at the highs. And
why did we open? Why did we open late last night? Do you know?
I don't know whether it was a system-wide thing or maybe the whole system went down. But I thought it was my provider that was having a problem, because I called them up and nobody was answering the phone, so I figured that they were overwhelmed. But I didn't realize there was a source problem, which it probably was. What time did you see it open?
6:30 Eastern.
Okay, yeah. That's pretty unusual for that to happen. That hasn't happened in a long time. Anyhow, we had a couple of rallies this morning. We sort of went back to, and in some cases took out the highs of last night, especially in the Dow, because of McDonald's earnings. But I was looking at this chart last night and thinking that if it rolls over, we're in trouble, and that's basically what's happened today. And actually, in the larger scheme of things, the daily chart, the rally has been so relatively feeble, I think you could say, and closing down on the week and things last week really is not a very good lead into this week, and to be selling off in the last day of the month is a very bad development as well. And many stocks are showing very bad monthly tendencies. However, the indices, at this point, actually going to probably, if we close around here, we might be on a kind of a doji month. If we break down further and we go negative for the month, I don't think that's going to be very constructive for the market.
Yeah.
And I keep thinking, I mean, look at your chart there. I mean, geez, this is a terrible looking chart. And if this follows through into Tuesday, and you've got the Fed, they're probably going to raise rates. So the market is freaking out about that. And this time raising rates another time might actually hurt stocks possibly quite dramatically. However, I think that we'll see, if today the bonds are rising and the market's going down, so we kind of hinted that might happen last week. So if you think about it, if they raise rates and the bonds did crack and the interest rates go to new highs, the market could potentially reverse on Tuesday, embracing a higher rates and sort of shrugging it off, and possibly by a lot, because I mean we're down, we've given back we were up a couple of 100 points earlier on the Dow. We're down 54 right now. That's normally when this happens, it's not good. Also, the semiconductors are breaking down. And you got this Kennedy curse thing. The VIXs are starting to turn very bullish again. We actually got long the VIXs right near the lows this morning. Sold the last rally, bought them back, said to buy them back near 41 here a short while ago on the VXX. We're back to 41.5. And I thought the rally would last longer, but it's the market's under such pressure today that it couldn't even hold up for more than 20 minutes or so. So it's really not. You've got to be very, very careful today.
Here's the VXX on a daily, John.
Yeah, well, these bottoms are very hard to pick on these VIXs, but look at the similarity to the last bottom before we had that big rally upwards. If we close above 42 today, 42.5, or if we go any higher than that, we really are setting the stage for. I mean that whole structure looks incomplete. It really looks like it's got to have another leg to the upside before this, and the market have another leg to the downside before this market can turn. Before we put in a good enough bottom. I think the problem right now is we're not seeing a good enough bottom that the big funds can rest on. And Tepper, who's been pretty astute and what's the word, prescient over the last couple of years. He's saying the market highs might be in for the year. Look, if we follow the Kennedy curse, and we are doing that today, it could be catastrophic, this market, and we would have the highs probably would be in for the year. And when you have such a meteoric run, it's kind of like gold really going up to 1900. When we were at 1900, there was almost everybody was convinced the market was going higher. And when we hit 26,000, I mean, the day they put 26,000 on the front of the New York Post on the cover, and probably on a few other magazines as well, it was a sort of kiss of death for the market. And
could you, John? There's a question from the audience. Could you explain the Kennedy curse again?
Yeah, both Trump and Kennedy, they were kind of mavericks, both of them. They were unexpected victories, if you like, in the election. And Kennedy had a huge rally. Kennedy had a huge rally, just like Trump. Pretty much tracking, they've been tracking each other right up to the highs. And the January top, the January-February top. And the scary part of it is that the Kennedy miracle, if you like, miracle rally, topped out and went all the way down to would be the equivalent of the Dow going back to about 16,000. Now that's the bad news. The good news is that, and to use to repeat what you were saying last week, that the market has a habit of testing, and I mean, it wouldn't be unheard of for this market to come all the way back to the election lows and give everybody who missed the first time around a chance to get in and then go roaring all the way back up to new highs. That could actually happen. And and that's what happened with Kennedy. Now, to be fair to Trump, the fundamentals, because of the tax cuts and things, are probably a lot more positive than the Kennedy situation. So you have to take that into account. And if that's the case, we may go down to 22,000. Look, the market could turn even right here. You can never say never with this market, because if it starts taking out last week's highs, then I think the market turns higher, because when you had Facebook and Amazon delivering staggering numbers last week, almost unheard of, and never been anything like it. And so remember the last time, not this quarter, but the previous quarter, when Facebook reported better than expected numbers, and it literally went from 180 to whatever 360 or somewhere as a massive run, and it just never stopped. And frankly, just a second, just get that get those numbers right. We went from literally what about 180 to 340. So actually, we went 180 to 260 before we had a bit of a pullback. But Facebook is. What I'm trying to say is, Facebook's previous quarter's numbers were so powerful that before they announced this quarter, right, which was just recently, the stock went all the way to 340. So we went from 180 to 340. That's why I'm so bullish on Amazon. I think I sent you that email. I mean, look, I think it was at least 3 weeks ago that I first mentioned Amazon going to 2,000, maybe even sooner than that, maybe even a month ago, maybe even 6 weeks ago. I first put that out, and I subsequently said we might go all the way to 22.75, and people may have thought I was bonkers. But when you look at what happened to Netflix, you can actually understand what could happen to Amazon. And then literally after I mentioned this I mentioned this on Thursday afternoon, and you said 2,000. Are you kidding me? Remember?
Yeah, I remember.
and literally not, and then the numbers came out, and within an hour or two, Goldman Sachs put 2,000 up as their target. So when Goldman Sachs comes out with a $2,000 target, it's not only probably going to get to 2,000, but it's probably going to exceed it. Possibly the 2250, 2275. I would say that's probably, maybe as high as Amazon's going to get. But what it tells you is, look, these stocks are so powerful. All of them, the Googles, the Facebooks and things. And look, I've also come out with, I think I mentioned it on Friday, the GDP. They usually get upwardly revised. So 2.5% for the first quarter. If it, I wouldn't rule out 3%. It could happen, or close to 3% for the first quarter. If that happens, we're probably going to do 4% for the second. Might even do 5 for the third, and 6 for the fourth. But I think that would be an extremely bullish scenario. But I'd say 2, 3, 4, 5 are a fairly good bet for the GDP this year. And there's compelling reasons why that's going to happen. I mean, I already explained. The accelerative phase of the stock market happened in late August last year, and we went up straight for 5 months. August right into the end of the year and into January. the economy has yet to reflect the anticipated stock market rise. So the odds of the economy getting substantially stronger are very real, and because of the tax cut, because of the extra wages. And by the way, on Friday they reported, and this is probably a reason why the market's going down today, the highest rate increase in 10 years. This is a big deal. It's finally happening.
Yep,
So,
it is.
And ultimately, these sorts of things are bad for stocks, but they're good for the economy. And even though the Fed is tightening, the Fed tightening is bullish for the economy, plain and simple, because it makes people. With interest rates are going up, people go out and buy more because they don't want to be paying more interest. They've had an unbelievable low interest rate environment forever. And so this is going to stimulate more activity. So if we get a couple of more rate hikes this year, and could have even 3 or 4 into the summer, or into the late summer, that could be very, very bullish for stocks. And it may push the dollar lower, which is sort of already happening off this rally we had this morning. So, and if they raise rates Wednesday, I would say the gold may come back and test the lows of this morning, could even take them out a little bit. But I'd say within the next 24 to 48 hours, we're probably going to, or maybe 50 hours, 30 to 50 hours or so, we're probably going to see a turnaround in the metals, and possibly a very, very big rally upwards, because the last rate hike didn't really do much for the metals for some reason. Now, the previous rate hike sent gold up about $120, $130. This rate hike now could do a lot more, because, as we said on Friday, the grains exploded higher on Sunday night. We actually sold them near the highs overnight and this morning, especially the wheat, got up to about 512, 513, and they're pulling back a bit right now, but I would probably look for a re-entry point. They have a habit of bringing the market back down to a level to give the people who missed out on Sunday night another chance to get in. So,
what month are you in soybeans?
July. Now,
that explains everything.
Yeah, but the point is that the odd man out, if you like, right now in the commodities is the metals, the gold and silver and things. In other words, almost all the other commodities are breaking out to new highs or off bottom. They're making bottoms, or they're almost all higher for the month of April. And we're at a 2-year high. So a breakout in the commodity index should bring the metals into play. And once the metals start going, they lift the whole commodity index usually. So they sort of, accentuate or accelerate the upside breakout. And that's what we're lacking at the moment. So that's why the gold could potentially be in for a much bigger run to the upside. And also, our proximity to an upside breakout on the metals is much better than it was, previous times the Fed has raised rates. So could the metals go down if the rates are raised? Yeah, you can never say never. The market has a weird way of reacting to things. But given the historical tendencies for gold to rally once the market raises rates, why the Fed raising rates? Because they're worried about inflation. The fact is they may be behind the curve. Draghi over in Europe is still pumping 30 or 40 billion into the economy in Europe, and he's saying that Europe is stalling out. That's more than likely going to keep him pushing more money into the system over in Europe. He said, I may increase again. He may go back to much bigger numbers. So the stimulus thing is still there, And as long as there's stimulus, that's going to be helpful for stock prices. So, in many, many ways, even though there's a risk of just, karma following the Kennedy curse, and there's a lot of things that could happen, because of things coming out of the left field with Trump that could precipitate an unexpectedly bad market. And the other thing is, when the economy gets really strong, the market does get into trouble. It doesn't perform as well as when the economy is sort of still accelerating upwards, but it's not too hot. When the economy gets really hot, the highs are usually close to being in. I mean, it's kind of like 2007. Very few people, including the Fed, saw anything going wrong in 2007, except this show, which, if you remember, we called the top in July the 19th, and we called the secondary top in October the 10th. So but it didn't look, nobody saw the two-year downtrend coming as badly as it came. So, except we did mention that it looked a lot like 1973. I think I remember saying on that show, that on your show, that I actually said, we might not see a top for quite a few years, a new high rather, for quite a few years. Right. And if you remember that, and the other thing is we had all these, we had the banks were making new highs. I mean, everything looked dandy. It looked like there was nothing going to go wrong, and then everything went wrong. So, could everything unfold as quickly this time around? I don't think so, because we really are in an incredibly strong economy right now. But you've had a few warning signs. We had this jobs number the other day, 103,000, came out of the blue. Nobody expected that. And these are the sort of beginning of cracks appearing in the dam of an economy that's running on pretty much all cylinders. So are we going to get a misfire? We shouldn't do, because the economy should perform very, very well in the next few months. And am I going to make a prediction? I think, look, it's still a long way off, but it's interesting that the general tone of talk out there at the moment is fear of the Democrats and all this, sweeping the elections. I can almost say for sure that if we do have the economic growth in the next few months, that will become less and less likely. And the second thing is, after Trump gave such an incredible speech on Saturday.
The Michigan rally?
Yeah, it was one of the best ever he gave. And he was really fired up. And, there's nobody can touch this guy. I mean, he's one of the greatest orators of all time. And he's a formidable force. And, there's so many naysayers out there. I mean, what the heck did they bring this guy? I mean, this guy, Chris Wallace on Fox. I mean, some of the guests they bring on, these Democrats, I don't know where they're really scraping the barrel, and they bring this guy Coons out, and they bring these people, the biggest bores on the face of the earth, and keep bringing them out. I mean, anyway, they bring up all this stuff about Trump last year, and nobody wants to give him credit, and then they get this guy, Bremer from Asia Pacific, I think it is, who's supposed to, he's sort of got a messianic complex. He thinks he's God's gift to everybody, and he's the last word on everything. And even, to be fair to him, he was very complimentary to Trump, but he made a statement which I suddenly thought, you know what? He said, Trump has made other foreign policy mistakes, but he got it right on Korea. And I suddenly thought to myself, you know what? He hasn't made any foreign policy mistakes whatsoever. Not one. Not one.
I'm not aware of one.
Nobody can name one, because he hasn't made any. He's been absolutely exemplary in every place he's been to. Everything's worked like clockwork, just like when he ran his campaign. Everything worked like clockwork. Plane came in, back it up to the airport, give a speech, get back on plane, go home. You know what I mean? I forgot to attract 40,000 people as well. So he's and he's doing the same thing again. And when he goes to, look at the way he was. No president's ever gotten a reception in China like Trump. Nobody's ever been received in Saudi Arabia like Trump. Poland, Europe, even
prior to Nixon, what president had been to China before Nixon?
Nobody.
Was he the first ever?
Nobody.
He was the first ever.
I think he was. Yeah.
Wow.
So, he and look, it's kind of. I wanted to say this. Well, this guy Kim Jong-un is really he's a pretty formidable character because Trump. And to be fair to Trump, he mentioned this a few times. This guy is a little bit like Queen Elizabeth being, going on the throne when she was like in her early 20s. It was a big assignment, and him, Kim Jong-un, taking over North Korea, with all these generals gunning for him, he had to lay down the law, and what he's accomplished in North Korea has been nothing short of phenomenal. And he's had these, incredible, he's taken the whole North Korea parade thing to a whole new level that's unparalleled anywhere in the world. And listen, we're getting a buy on the golds. We've already.
Yep, I'm just typing it on the screen. Consider buying 1320 to 1322.
Yeah, and the same with the stocks. They're looking. We put a buy out in the stocks earlier on this morning, but they're jumping huge now.
Wow,
so
it already ran through it. Look at that.
So something's going on here.
Barely had time to get it typed. Yeah.
Yeah. So don't forget, we might get a retest tomorrow. So be ready for that.
And look at the 22 guys, and those of you that are partners, just exactly what's going on there. So.
So going back to Kim, This guy is a household name. Look, I guarantee you, while they might know the president of South Korea's name is Moon, they probably don't know his full name, but everybody knows Kim Jong-un, right? Secondly, I think the thing that's gotten to Kim is all this sort of where he's the center of attention. He's a megalomaniac, and he's the center of attention. But going to China and being, given the treatment that he got, and going to, and now going to South Korea and doing this thing last week, he's getting admired and feted like nobody in the world. And I think he's loving it. He's absolutely loving it, because this is really what he wanted to show to his people. If anything's going to be the continuity of his regime, it's the people of North Korea realize he's being treated like, the Messiah kind of thing. That's a huge boost for him at home. So he's probably making, this giving in to all this stuff is probably a smart move, because unlike Saddam Hussein, who went against the U.S. and ended up, getting hanged eventually, this guy, if he'd been smart and gone friendly to the U.S., the world would be a different place today. We wouldn't have Iran, number one, with its power today, because Iraq, if it had sided with the U.S., would have been a buffer against that. So he really screwed up big time in the Middle East by being hostile to the U.S. That was a huge mistake.
RJ just notified us that the Israeli Prime Minister is live right now talking hawkish on Iran. Thanks, RJ.
Oh, that's okay. Yeah. So, well, that's the other thing that's going on. I tweeted at the weekend that if we can fix North Korea, fix Iran, fix Venezuela, the world will be a far better off place, before the end of the year. That could be very bullish for markets, by the way. But one of the things that nobody's talked about yet, which I think Kim should offer, or maybe they have discussed it, but they haven't mentioned it yet. the biggest threat still of North Korea actually is this all these rockets that are targeted, guns and artillery and rockets that are targeted at Seoul. And I think that they should, I hope that they will insist that he literally withdraws all those armaments away from the border and puts them somewhere up in the north, into storage or something, because that actually is a way of really, taking the power away from North Korea. And secondly, if he ever tried anything to try and reposition that artillery, it would be picked up in a nanosecond. And obviously we get a pretty good sense that this guy's not playing by the rules.
Right.
So I think that's something that nobody's mentioned yet, and it's one of the most important kind of requirements of a really good deal, a deal we can believe in, kind of thing. So
yeah, because we didn't get much of a good deal last time, right?
No, and look, I think they keep dragging that up, but I think this time, once bitten, twice, two or three times bitten, three times shy. And I think this time it's not going to be wolf, anymore. It's going to be the real deal. So that's a good thing. By the way, the oil is going crazy today as well. We put out a buy on the energy yesterday on the dip, and we just hit 69.30. Wow, 69.30, and we're at 215 on the gasoline and 217 on the heating oil. Wow, that's amazing. And the oil stocks are rallying very strongly too.
Let me pull up that crude chart right now. Whoa, yeah. Well, boy, that's now. Okay. Do you tie this to Israel and Iran as well?
I probably would, because right definitely, yeah. The foreign minister of Iran came out over the weekend, and he said there's a clause in the agreement saying they're never gonna, produce nuclear weapons. Whether that, and he said Trump hadn't read the agreement or something. Well, there is an outside chance that Trump might not. It seems to be too cute that everybody, Macron and everybody else is saying, oh, he's not going to sign the deal, or he's going to back out of it. He might actually not do that for a number of reasons, which you have to be prepared for, including, apparently Kim Jong-un said today he doesn't care whether there's a deal or not with Iran, which is kind of interesting. But if Trump did actually respect that deal, it might give him a much bigger leverage over North Korea. So he may, at the end of the day, he can always get out of it at a later date. But for a number of reasons, he might choose to go along with it. Just to sort of get the Europeans on side or something. There's definitely some wins in not upsetting the apple cart too much, but that potentially paves the way for something more drastic to happen later on. And look, if everything goes well with North Korea, whether it has to be seen in Iran as that not being a pariah and being more, being a responsible nation along with the rest of the world, has its benefits, which Iran has already benefited from, for at least getting part of the way there. And if they kind of stand down and behave, quit some of their behavior over there, then the world will be a better place. So you can never say never. There might be a lot of stuff going on behind the scenes that we don't know about. But that would be a big surprise, and it would probably earn Trump a lot of points if he didn't back out of that deal.
Yeah, I would think so. This crude, crude of late has It hasn't. I haven't seen as many trading opportunities. There's been a lot of sideways. It comes in in starts and stops. It's not flowing. You'll get this, and then hopefully we don't return to this. Is kind of what I'm referring to here on the left side of the chart.
Oh, he's saying that Netanyahu, Iran has secret projects to produce warheads. So, well, they've done it before. Remember, there was some spies who, or some Iranians who defected, and they found a whole lot of stuff that was going on that nobody knew about.
Yes, I remember that.
Yeah, it's probably the same old thing all over again,
I think so. All right, so there's crude. We laid that out. Last night, we suggested to be short 67.90. So the market made $600 per contract available on that trade idea. And then the idea to be long 68.60. So far, it's made $700 plus per contract available. So, yeah, I hope crude will keep this up because, if it just... the range, the daily range on crude has not been that great of late, and so maybe we'll see.
Yeah, this is what I was saying earlier on about the commodity, the commodity index breaking out. Nothing helps the commodity index more than crude, higher price crude. So, by the way, just because I can't have time to tweet right now, I would have sold these. Just those numbers I mentioned, that was a sell on all the crude just now, 215. On the RB to 60, just over 69 on the crude, and because I think it's going to come back here and take a bit of a rest right now, and even the metals here might ease back. The stocks are already easing back a bit. So from a very good rally, but I still think you've got to be very, very careful between now and Wednesday. Still the next 50 hours, because by this time Wednesday it'll be 3:30. So within that period between 2 o'clock and 3:30, or even going into the let's say between 1:30 and 3:30, you'll probably see some incredible volatility in the metals, because one of the things that's happened is the gold tends to sometimes they go all the way down and test the recent lows. Especially if it's been weak, and then it turns around and takes off, and sometimes it can take off kind of with the same drama that just happened a short while ago.
Right.
So I think that, I think the fact that the metals turned here off a very fairly ugly looking bottom this morning, out of nowhere almost, is very constructive for a move to emanate from here in the next few days on the metals, and possibly see. Look at the dust. Look, one of the things about the dust is when the dust doesn't. Actually, the dust is kind of on a bit of a buy, but when the dust is going up, and it can't follow through, and it doesn't seem to keep going, and in fact it breaks down. It's usually a sign that the top is in on or the bottom is in on the gold and the metals. So
say
and also when the dust because the dust opened higher this morning, right, and the J dust, and if it was really bad news for gold and silver, they would be probably $1 or $2 higher off the open, right?
Right.
But they're actually I think they're down on the day right now. No, they're still up on the day, I think. Hang on. Yeah, still up on the day, but not by much. And a short while ago they were only barely up on the day. So if we break down, it might take a day or two for them to top out. But the fact that they at least haven't gone in now, you've got to be careful, because they came down to the opening gap this morning, and they're starting to go back up. So, and the gold is developing a sell here. So as far as I'm concerned, you got to sell the metals right here. I think the rally's over.
Let me bring up the chart of this this dust of which you speak. Is that the symbol DUST?
Yeah.
Now, for those who aren't familiar with this, I'll ask you to explain it, John.
Well, look at what's happened to the dust since the beginning of April. We've kind of been trading down, right? To, by the way, almost all-time lows. So that tells you that there's not a huge amount of conviction in being negative on gold. Secondly, look at the developing kind of triangle here. You know, what do you call it?
Consolidation.
Yeah.
Coiling.
I mean, imagine if this thing breaks down here in the next few days, takes out 20, 21, 20.
Sure, we could draw a trend line across there and and right up here. What I was asking, most people are familiar with stocks, and people who listen to this radio program certainly are familiar with futures. Can you explain what the daily gold miners index bear 3x shares? Can you just, some people may not be familiar with ETFs and that kind of thing.
Okay, look, there's a thing called the GDX. That is, it's the gold miners. It's a kind of an index of the major gold miners. Okay.
VanEck, Vectors Gold, yeah.
And you can see that, look, from the last Fed hike, we've been kind of going up on the gold, right? But not very convincingly.
Right.
But we're making a kind of a flag formation triangle there. And if we break out, I believe the next move on the gold and the gold stocks could be a near vertical up move from here. That'll take us back to where we were, back in February. Now, in the January, February. So now the VXA, sorry, the
GDX.
No, the Nugget, the NUGT, is the triple version of the GDX. Okay.
Explain what triple means.
Well, it just means you get triple the bang for your buck. If you buy the GDX, and
if the GDX goes up 1 point,
this goes up 3. This
goes up 3. And if you're on the wrong side of the trade,
it
moves against
another
you
thing called GDXJ.
GDX what?
GDXJ.
Here we go.
Okay, they're kind of like peas in a pod, the GDXJ and the GDX. But when we're really bullish, the juniors often move, more bullish than the. When the gold is down, the GDX kind of goes down more, like it did back in December, January. You see that before that huge rally, but when the GDX starts leading the way higher, it can actually outperform the GDX by a long way, because the juniors, the junior golds. Over time, in a real bull market in gold, the junior golds usually go up 10 to 20 fold in a really good bull market in gold. The seniors, the major miners, don't go up anything like that. They might go up five times or something like that. The triple on the GDXJ is the JNUG, Junior Nugget, JNUG.
Okay, I'll bring that one up just a second. I just wanted to drag this up, and on this one that we were just looking at, the GDXJ, we got a pretty broad channel there for price. So I mean, this thing could run all the way up to 34 and change before we hit the top of that price channel on a daily chart. Okay.
Yeah.
Now, I'm sorry, the next symbol, what was it?
The JNUG, JNUG.
JNUG, okay. And these are bought more like a stock.
Yeah, they're very good. Listen, they're very good things to trade, because one of the good things about them is they have a very tight spread. It's usually one tick when you're buying and selling. And the dust is the same, DUST, and J dust. So J dust is JDST is the opposite. Is the opposite of JNUG. See it?
Mm-hmm.
Now, if you can put up Royal Gold, RGLD.
RGLD. One on daily, weekly?
Just the way you were.
That's a pretty strong move there.
Whole different. Yeah, exactly. That's what I was getting at. And look, this thing is literally 10% from an all-time record high. So it's considering gold is 40% from an all-time record high. This thing is really telling you that we're in a bull market in gold. And I mean, look at today. I mean, it's actually it's down fractionally right now. So, but the problem with this Royal Gold, GOLD, Newmont is actually a good one. Newmont usually has a spread of one or two ticks, so it's good for trading in and out of. If you want to put Newmont up, NEM.
NT?
No, MEN. NEM.
Got it.
Yeah.
NEM. There we go.
Now,
Double top.
okay.
Yeah.
Yeah, but that's Newmont now. If it were to reverse and go higher, is probably something you want to be long, because it's very close to hitting a new 100-week high. This stock, 100-week, not 52-week, 100-week high. And if it were to do that, it would be, it would probably go for a pretty big run. So it'd probably go to about 45. And if you remember, just going back to Royal Gold for a minute, if you remember, how many times on the show have I said be buying Royal Gold in the last few months, and look how well it's done. Now, the other one is GOLD. So, when you look at GDX, it's made up of Newmont, Gold, GOLD, and a whole bunch of...
Are we talking Rand
Gold? That's,
okay. Right. There we go, Rand Gold.
Okay, see the difference? I mean, it's staggering. Wow. So yeah. when you're looking at the nuggets or the GDX, you're really looking at a kind of a combination, and you know that the nugget is in the middle of all three. It's like an average. So you've got an extremely bullish gold stock, you've got an average gold stock in Newmont, and then you've got this one, which for some reason is underperforming. But I think that the interesting thing about GOLD is it's kind of on a three-wave. It's got a kind of a three-wave structure of monumental proportions, I might add. That when it breaks up, when it gets going, it's going to go like a rocket north. It's going to go up it's probably got at least $10, maybe $10-15 to the upside. This is going to be a very big deal when this thing breaks out of this range that it's trapped in. And isn't it interesting that GOLD today is actually one of the strongest gold stocks? So it's telling you this move is just probably getting ready to run here in the next 50 hours or so. The grains which broke out big time last night are actually coming back here a little. Remember the whole thing with these grains, especially the beans, is they've gone up and down and then up and down. Same with the cotton that we were talking about the other day, and a little bit kind of the same with the gold. I think the gold, this sell-off in the gold today is a little bit like what happened to beans after that first kind of limit up move we saw, after the planting. Remember that? Mm-hmm. And I think if you look at the huge rally we had right up to the breakout point of gold a few weeks ago, and then we had this sort of sudden downside test. I think this is the same thing, as what happened with the beans. So this extreme bottom is probably going to turn into a pretty big buy here. And look, remember when we had that extreme test in the beans, which look at where we are right now. We're up in 1050 range, right? What happened before was we went up through 1,000, right? We got up to about 1,010 or 20, and then we screamed down all the way down to about 1060, maybe even 960, 970, 950, somewhere like that. And then if you didn't catch it quick enough, you missed it, because next thing you know, we were back up over 1,000 again. And and I was saying this last week, it feels to me like the gold is doing the same kind of thing here. So this is just maybe the last test. And I said, look, that when your gold is consolidating in the low 20s, in the low quadrant, of a big number like 1,300. If you go back and look at 1,200, that's what happened. If you go back and look at the big rally, the $100 rally that we got when the Brexit happened, it was the same thing. We were consolidating in the lower quadrant, and then we were shooting up dramatically. So this feels to me like it's a rally in the making here in the next few days.
Can you see the chart I have up right now on those this last leg up? We I shrink this down a little bit. Yeah.
Is that from last night? Wow.
this well, no, that's the 27th. Last night kicked in.
Yeah, I'm just looking at that morning sell. Do you see the way it's crazy. You see these huge run-ups, and you think this thing is gonna go, to the moon. And next thing you know, they're knocking the heck out of it. It's crazy, Yeah,
this was the opening candle last night, right there. Beans open a little later than the rest of the Globex markets. 8 o'clock Eastern.
What's that green average you got there?
It's a proprietary indicator.
Okay, you should probably fine tune that average to intersect with the 1068, because you might get some pretty good readings off a lot of trades by doing that.
Oh, that's the basis of that's the basis of everything that we do.
Yeah.
The indicators.
Well, I know you're going to get it on a larger.
No, see here's.
But you might get it
right here. We haven't had a bearish cross on the monthly chart in the ES for over 5 years. So, and we are getting one of the first sell signals that we've had since October of 2016. First sell signal on the monthly chart, and it's not even a confirmed sell as of yet. If this month closed red, then I would consider it so, but I don't believe it's going to. We've watched this chart the whole month. It started out as a doji, then it was green, and then it was red, and now it's green again. So we'll see what happens as the market finished today, because today's the end of the month.
Yeah.
Okay.
Yeah, actually, the market's rallying a bit more now.
Yeah,
and it's actually doing what I thought it was going to do. Remember, I said it might go for 2 hours, this rally, and it's actually is going for 2 hours by the looks of it. So, and the Dow's actually gone positive a little bit too. So it's kind of it's better. But there's some, one of the big risks overweighing the market is the semiconductors, and also Apple. Apple. If Apple misses, that could really drag the market down a lot.
When do they report?
I don't know, actually. I should know, but I just it's probably this week.
Let's see. Apple earnings. Karen says Apple reports tomorrow. It's after the bell, right, Karen? Is that right?
Yeah. So.
Yes, after the bell. Thank you, Karen.
Yeah. So. Okie doke. Well, listen, thanks very much for the invite. It was a good show.
John, been a pleasure, as always.
Yep.
Thank you so much.
You're welcome.
And we'll talk to you same time tomorrow.
Likewise. Thanks a lot. Bye-bye.
Have a great day. Okie doke. Let me close his mic for him. There we go. Okay. All right. Just to recap here on the S&P 500. Last night on the Concierge Trade Alert, we said to consider being long 2681. And in both cases, if you were long, you were stopped out. That's the truth about trading. We also said if the opportunity presents, consider being short 2669. And that one handed up 15 plus points. We trail a stop, or we teach you to trail a stop. Therefore, you'll never get out at the exact swing high or the exact swing low of a move. The idea behind trailing the stop is one, to, of course, lock in profit. It also allows you to protect your backside, but it leaves the front door open. In other words, let's say on any particular move, well, let's just say this move, 2669, and let's say we had a target of 2663. No, that's reasonable. That's a 6-point move. If you get out at 63, the target, if you take yourself out, you got 6 points, and you had a very nice trade. Nothing at all wrong with that. And many people choose and prefer to go that direction. In trailing a stop, you simply leave the front door open so that if it were to mosey on down to, say, 2656, you pick up an additional 10 points. Now, the trade-off is if it screeches to a halt at your target, 63, as you thought it might, and starts to head the other way, well, this is where the part comes in that you're going to leave a little on the table. And so, as you move into discretionary trading, well, let's go back to rules-based trading. As you see in the live training room every day, we start new partners out with a hard stop and a hard target. Everybody always has a hard stop. But when you're first learning, we encourage you to use a hard target so that you can reach your daily goal. We talked about this last week. Price can run up and touch your number, whatever that is, 2676. You can even grind it there for a while, but just touching it doesn't guarantee you're going to be filled. It needs to trade through it. It needs to go at least one tick higher or one tick lower. Then you know that everybody standing in that particular line got soup. I won't do my whole soup Nazi thing today, but I'm sure you've heard it before. Okay, so that's the S&P. Now, on the Dow. Last night's alert was to consider buying 24,335. We ran up 130 points. Important prices and important areas are almost always tested. In fact, we did not get a test. Well, here, 81, yeah, 81, 81. Now, 69, as of yet, not tested. Not on a 30-minute. Smaller time frame, you probably would see a test. We may be coming back to test for the first time. It can happen in minutes, it can happen in hours. It just depends upon market conditions. Main thing to keep in mind is that important prices and important areas are almost always tested. Okay, so at 24,335, ran up to 457, looks like, so roughly 130 points, and price gets back below the trigger. Off we go again, this time 95 points. Okay. And as we start to cross back below here, it becomes evident that we have put in a lower high. Okay. High, lower high, lower high, that the market's a bit heavy and that we might be getting ready to trigger on the short side, and indeed 45 points. Price gets below the trigger, back above the trigger, back below the trigger, back above the trigger. Now this is a 30-minute candle. If you broke this down into a smaller time frame, for instance 5 minutes, then you would see this. And by this I mean you can clearly see where you come down through it, you back above it, down through it, back above it, down through it, back above it. It's a 5-minute chart. That's pretty close to straight. Okay. Now, the Dow's $5 per point. The most we want to risk on a Concierge Trade Alert. We, in the live training room, rules-based trading, we only risk 8 ticks on any one trade per contract. Discretionary trading, we're willing to risk as much as $300 per contract. If we have the ability to risk less, certainly we will. We will let the chart dictate to us where the stop loss needs to be. And if the chart tells us that we need more than a $300 per contract stop loss, we walk. Because with 8 markets and 2 trades per market, when you open the email, that's 16 trading opportunities, trading ideas. Not all of them will trigger. Most of them will. Many of them will trigger multiple times. So over the course of a day, you may see 30, 40, 50 trade triggers on a really busy day. So this gives you the ability and the opportunity to be very selective in the trades that you choose to take. In this instance, right here, we triggered at 270. Okay. Now the initial trigger. Let me explain it this way. This might make sense. Okay, $300 stop loss. Did you ever wonder why they didn't put a divided by sign on the keyboard? 300 divided by $5 per point equals 60 points. So if you are going to go short 24270 as outlined in the alert last night, 60 points would be 24330, which is right here. All right, 70 plus 60, 130. I believe that's good math. Okay, so that would mean that the maximum stop would be right here. Okay, so we can kind of see why we're not in that first trigger. Arguably, yeah, no, I don't want to argue. It's too early. Now, you don't have to risk, just because you have 60 points to risk on this particular trade, because it's only $5 a point. If you could put your stop at, oh, say 24,310, then that would be better, right? That would be less risk. And I go over that in great detail in all the one-on-one mentoring sessions. And it all, starts to kind of, the clouds part and all that good stuff. So let's go back to our 30-minute. There we are. Okay. So what I really wanted to demonstrate there was that on the 30-minute, you see how every one of these candles is still connected to the trigger. In other words, there was no pull away. Not a lot even on the 5-minute. This one candle would represent the pull away right there. Okay. We have on the 5-minute double bottom. On the 30-minute, that's what it looks like. Okay, moving on to the Russell. And of course, these would be last week's zones. Oh, where did my chart go? I'll find it. Okay. I think I got it. I got it. Yeah. Now, okay, let's redo that from the high to the low. There we go. Okay. And you know what? Let me say this. As I've been trying to determine how I wanted to do this. If you see one yellow weekly trading zone on a chart that I display, assume that all zones on that chart are last week's zones. Now the partners, of course, get the zones every Monday morning, 6:15 a.m. Eastern, in their emails, so they can get their charts set up before Wall Street wakes up. And every day, every week on the radio show here, I do reveal this week's zones to the audience at large. Take note of those because as we move into the new week, you'll find that even last week's zones still pack a punch. Okay? All right. The sell-off in the Russell, 50% retracement would take us back up to 1558. Let's look at what happened last night. Last night, the trade alert. And if you didn't get a chance to take a screenshot, go ahead. All right, on the Russell, consider selling 1548. We've not been there. Or the other opportunity by 1567. All right. 67 was just enough. The swing high was 67.4. Okay, which, if you're long there, all the indices turned at that point. S&P, Dow, Russell, NASDAQ, everything. Okay, this and the short side of the Russell at 1548 is yet to be triggered. Here. Now the NQ. All right, on the NQ. Let's find the open. Yeah, there's the open. Guys, I'll be right back in just a second. And we're back just like that. Okay. NQ. Last night, consider being long 67.10. Right here. 67.10. That also resulted in a stop out. The short side of the NQ, 66.71. That's the train you want to be on. Now, there may have been even an early stop out on the short side. Let's see here. 66. What was the swing low here? 66. This is the low. 71.75. So, I guess not. $66.71. All right, I guess that's close enough. Sell 66.71. Now, we see this very often, where price will, kind of wish I hadn't done that, but we'll fix it. It'll take forever, but oh, brother. All right. Hit the easy button. Okay, so there is an easy button. I've been kidding all along. No. 66.59. Mechanically, there is. All right. Back to the task at hand. Consider selling 66.71. And we dropped to 595. So we would be talking, well, obviously 71 points. And throw 5 on top of that. So what do you got? 75? Works for me. $75 points times $20 per point. That's what the market made available. Again, if you trail your stop, as we teach, do not expect to get out at the swing low or to take 75 points out of this trade. You trail your stop, and as price begins to move up, the market takes you out. However, you're leaving the door open. Well, for example, let's say this trade had a hard target, 71 to 31. 71 to 31. Nice 40-point trade, and nothing wrong with that. Trailing a stop, you might have been able to pick up the additional 35 points. Had price not continued in that direction, then by whatever distance you're trailing, Okay, that's not going to be in your check at the end of the week. Okay. Now this move here took us all the way up to, let's see, 67.10. It got up to 67.18. That's $160 per contract available. Now, that's what the market made available. Right, here's the question. How much did you risk to get into the trade? You never want to intentionally enter a trade where you're going to risk more than what you believe the potential profit from the trade might be. And again, that's something I work with you on in the one-on-one mentoring sessions, is to help you determine where price will potentially go on this move. So if it's not, I mean, now there are untold websites and companies out there that will teach you a training methodology where you risk, oh, say 10 points on the S&P, and you have a profit target of 5. That can go well for a period of time until it doesn't, and then you catch 2 or 3 of those in a row, and it gets real ugly. It's bad math, it's bad science. It's a captivating thought. Well, yeah, with that big a stop, you know, shoot, I'd probably never get stopped out. I mean, chances are, right? And some of them are really out there. You know, I'm going to risk 10 to make 2. Okay, but one stop out, and you wipe out 5 days of profitable trading. So, just this is a market truth. You can put this, you can write this in ink. Okay. Never risk more on a trade than you realistically believe that you can profit. That same, you got to be able to price. It's got to at least be 1 to 1. 2 to 1, yeah, better. 3 to 1, sure. Just don't flip it around the other way. I don't care how deep his voice is, or what kind of swagger he's got in his walk, or how convincing his argument is. It's bad math, it's bad science. If you go down that road, you will eventually agree. You'll send me an email. To whom it may concern. That was bad math and bad science. Yeah. All right. So, 75 points at, what did I say, $30 a point? Okay, why don't we make that 20? $50 points on the NQ, it's $1,000. 75 points is $1,500 per contract available. Now, if you take a full stop on the NQ, we don't want to risk more than $300 per contract on any one trade. So if you take a full stop, $300 per contract, the market turns around and gives you a $1,500 per contract opportunity. This getting stopped out, that's a cost of doing business. Just like the guy who decides to open a sandwich shop. Let's give it a name. Let's call it Subway. In order to make money, he has to spend some money. Of course, he's got to buy his franchise and lease a space. But, I mean, we're approaching opening day. Well, we got to go buy some meats and some cheeses and some fresh produce, you know, and some condiments. Cost of doing business. As a trader, you don't have a lot of expenses. Electricity, which you probably already have. A computer. A good computer, which you probably already have. If not, a really good computer can be had for under $1,000. So you got electricity, got a computer, You got to have some charting. You got to have a data provider. You know, there are a few sundry expenses. But compared to most businesses, not a lot. Just not a lot. So, in our cost of doing business, stop outs. Men, and women have spent decades and untold sums of treasure trying to find an indicator, an oscillator, a methodology, a phase of the moon, anything that would make being stopped out a thing of the past. Some people even go to the extreme of, well, if I don't use a stop, then I won't get stopped out. No, but eventually you'll get put out of business. So that's not a good idea. And now you're also going to hear the faulty argument out there. Well, if I use a hard stop, then they, whoever they are, they're going to know where it is, and they're going to run it and take me out. Wow. You should write a book on conspiracy theories. Just teasing. That whole, if you're in a thinly traded penny stock, is it possible to move the market with a few $100s, a few $1,000s? Yeah, it actually is. But the S&P 500, which on any given day trades between 1 million and 2 million contracts, it's not quite that simple. Oh, which brings up another thing that I wanted to show you, or I wanted to take a look at myself, because I read this last night. We go okay, that's 30-minute volume. Now the chart will get ugly while I go to daily for a minute. Or I won't. I just want to see the daily volume. Where am I? Oh, I'm on the NQ, and I was talking about the S&P. So let's just undo all of that area. Remove volume. Yes. Go back to the 30 minutes. And don't I have an ES daily? No, we'll use this one. Put this on daily. All I'm after is the volume of late. There we go. Alright, so far today we've done almost 800,000 contracts. Friday we did just over 1 million. Thursday we did 1.25 million. And the biggest day last week, a little over 2 million. Okay. So 1 to 2 million on the S&P. Now, that's the volume. But now, a thinly traded penny stock, if you got some money, yes, you can push that thing around all over the board. But this is one of the reasons I found attraction to the futures, because no naked short selling, no market maker. And I know that some people believe that there is manipulation to some degree in futures. I just have a very difficult time seeing it, and I have a rather vivid imagination. So we'll call it that. All right, back on track. Where were we at? NQ. Oh, somebody type in for me the CME Bitcoin futures symbol. We haven't been really tracking it because it didn't have a lot of volume. I saw a headline yesterday that said Bitcoin futures have popped in volume. And I want to take a look at that. Oh, do tell. active indicators. Remove all. Thank you very much. BTC K8. Well, we'll take a look at both. This is daily. Let's throw some volume down. Whoa. I would say that's that's an uptick in volume. I mean, I wonder if at BTC, yeah, there's a continuous chart available. Aha, now we're talking. Okay, so, well, let's scrunch it up. I guess, is that all there is? Guess that's all there is. For now. Okay. So volume began to pick up. It looks like, to a degree, mid-March. Now we've had some. Oh, this prompted the headline I read probably. 10,000 contracts. What other? Well, this would cover all of those. Now there's a secondary symbol for Bitcoin on one's an index, CME Bitcoin Futures. They've got another symbol. Apparently, you guys aren't familiar with it because nobody's typed it in. So we will look it up. Those are all the same. Okay, let's go to all. I know they got another. Okay, let's do this up. CME Bitcoin symbols. One's just tracking symbol, I believe. Sort of like the S&P cash. Can't actually buy it. CME Group. There is the CME CF Bitcoin reference rate, which is BRR, and the CME CF Bitcoin real-time index. All right. Well, let's take a look at those and see if we can chart them. BRR. It's not a valid symbol. And the other one, BRTI. Okay. Now this article was published by the CME. CME Group, all products, all codes. All right, let's get to the bottom of this. Because if the volume has come into play, then we certainly want to take advantage of that. Because that's one of the issues with trading Bitcoin, straight across the board, is you have no leverage at all. Okay. not much happening in that contract as of yet. So okay. All right. Now, let's see what we can see. Okay. Okay, now this is a range chart, just like we use in the live training room every single day for trading all the different markets that we trade there. So we get a bullish cross, and price pulls away, and price pulls back to physically touch, and we get an up close, and then we would buy the open of the next candle. And so if you were trading Bitcoin futures on the CME, with their indicators set, there you go. Now if we back it out to 30 minutes. Now this is a really good example. Bullish cross on a 30-minute. Price pulls away, price pulls back, up close. Okay. So if we glance at a 30-minute as a point of reference, okay, I want to be taking long trades if I'm going to take any trade at all in this futures contract. Now, if I want to be able to limit my risk and execute my trade with surgical precision, I'm going to drop it down to this. Bearish cross, price pulls away, price pulls back, down close, sell the open of the next candle, minus one tick. Am I loving this or what? I think I am. Oh, this looks so good. Physical touch, down close, sell the open of the next candle, physical touch, down close. I feel like I just opened a candy store. And this candy can actually be good for you. So, alright, now let's figure out what this thing pays. Let's figure that out. Let me just click on this. Contract unit. Okay, so one futures contract. 5 Bitcoin. Minimum price fluctuation outright is $5 per Bitcoin. And since there's 5 Bitcoin in the contract, then the minimum price fluctuate one tick is $25 per contract. Okay. So in this example, we would be entering on the open of this candle, minus one tick. And that price is the open of this candle. 92.75. $92.75 minus one tick. That's good. 92.75. Okay. And so if we're at 92.75, the next tick is going to be well, it's $25 a tick. Okay. So we're at 93.60. Let's bring up a DOM. Let's do that. Okay. The DOM, 93.60 to 93.65. That's a tick. Okay, so this is 93.60. So the next tick is going to be 93.65, and then 93.70, 75, 80. Okay. So then minus one tick over here means that we would be looking to sell on a stop. If you don't understand what that means, let me know. Everybody was very excited when this futures contract became available, and it sort of flopped. 92.70. Okay. Now, this leg dropped to 9,200. 9,200. So that's 70. It's 35 ticks. Now catch me on the math here if I'm off. Because the next tick below 92.70 is not 92.69. The next tick is 92.65. So if we take 70 points divided by 5, the next number is going to be 65. So yeah, as best I can tell, that would be 35 ticks times $25 tick. Now if somebody comes up with different math, or you're seeing this properly, because we haven't spent any time with it because there hasn't been any volume. But if volume's picking up, we want to be on top of it. Okay. Now, shuffling on. Let's get a reading. $875 per contract available if I've done the calculations properly from the entry here to the swing low. And again, we don't get out at the swing low for trailing a stop, right? The maximum available would be $875 per contract. Now the spread, in other words, the difference between the bid and the ask, is perfect. Couldn't ask for better than that. And on the bid right now are 63 contracts, and on the offer 71. So not huge numbers, of course, but this thing just might be coming into its own. So I'm gonna take a moment, and I want to write down. Okay, BTC futures, and I'll put this out in a post tonight. BTC futures, 5 Bitcoin per contract. Which, okay, that's an interesting point too. Price is currently 93.75. I just dropped. Wow. Okay, we got some real volatility here. You see that? Let's go over here. Okay, current price 90. We'll call it 93. We'll call it 93.65. 63.65. Times 5. All right, when you buy one Bitcoin futures contract at the current price, it's worth 45 grand. Just like if you buy the S&P right now at the current price, the value is about 140,000 roughly. Let's see. You take the current price, 26.56. 26.56. Multiply that times $50 per point. 132,800. So right now, if you buy one S&P 500 E-mini contract, I'm not saying you should, buy it or sell it, that contract, in exchange for your $500, you now own $132,000 plus of S&P 500 best of breed equity. Many S&P stocks you can't buy. Well, some S&P stocks you can't even buy one share for $500. That's when I talk about the leverage of futures. Yes, and that's why it's so important. Because of that leverage, it's so important that you use aggressive risk management and always use a hard. All the things that we did. That's the reason, crux of the apostrophe. So getting back to this Bitcoin journey. Okay. All right. So now we're at 93.80. All right. Okay. Hang on just a minute here. 93.80. $9,380. Okay. And there's 5 Bitcoin and 1 contract. No. I'm doing this wrong. 93.80. That doesn't. If we go 93.80, it can't. Yeah. See, with the S&P, very simple. You just take the current price and multiply it times 50. The Dow, you take the current price, you multiply it times 5. Let's see what the margins are. I'm sure the margins with this volatility is going to be significant. Let's take a peek. Position, price limits. Okay. From the DT Pro platform, you click Help. When did they change that? Oh. Hang on. Got to be in the right place at the right time. And this is the place you want to be in. Right here. Okay. You go to Help. And you go to Contract Margins. If you have a browser open, it will open a new tab in your browser, as it's doing in mine right now. Imagine that. It doesn't want to go away. Okay. And we'll resolve that a different way.